Some dreams are big. Some dreams are small. Some dream to go from place to place. Dreams of love and ever after. Dreams and sacrifices that builds the future. Whatever the dream or step or journey, you can do more with a partner that cares about your dreams. Access, more than banking.
Welcome back. Now we go straight to the uncommon analysis. Yes, it is common. You could actually do it on your own, but it is uncommon in the media arena. The table you are going to be seeing on your screen reports the turnover for the first quarter of Nigerian banks, and this include Access, Ecobank, Zenith, UBA, GTCO, Fidelity, FCMB, Union Bank, Sterling, Wema. Like I did say earlier, First Bank or FBNH is yet to release its first quarter report. Actually sent, I think the audited report is even also yet to be released in the market. I actually sent a test to the managing director, Shola Adedutan, was it 2 weeks ago? We are yet to see your audited report in the market. He snapped me, didn't respond. Anyway, that is not an issue. But looking at this, you will see that in the first quarter, Access reported 322.2 billion turnover. Ecobank 245.4 billion. Zenith 191.5 billion turnover. UBA 183.9 billion turnover. Fidelity 71. Okay, GTCO 119.59 billion. Fidelity 71.3 billion. FCMB 58.3 billion. Union Bank 43. I told you the other time that this Union Bank, are you sure it is still strong, big, strong, and reliable? This result is not showing so.
I told you that it could be, it might not be big, but it's strong and reliable.
Sterling 38 billion. Wema 30 billion. Give it to Access.
It is. It's clearly, if this were to be an exam, this is the ranking. They are the first, without missing words.
You know, one thing about Access I will always remember. If I'm not mistaken, around 2005, then Umukwede was still the managing director. About Wigwe, the managing director now, was the deputy managing director. They had an investors forum in Golden Gate restaurant in Ikoyi, and I was there. Herbert was the one that made the presentation. They actually showed on a graph what they intended doing and how they intended to emerge as first among the first 5 Nigerian banks and going forward. They might necessarily not have been able to achieve that in record time, because between 2005 and now, you're talking about 12 years plus or minus, if I'm not mistaken.
Yeah.
Right? Or even 17 years.
About 17 years.
Okay. But at the end, they are not just the biggest in volume. This bank is aggressive. And the gap between them and the others seems to become wider than it used to be. I cannot imagine Zenith 191 billion, whereas Access is reporting 322 billion. Arena.
I'm even just thinking that this is just the beginning. You know, when you just take off a race or 100-meter dash from the blocks, this is just the beginning. They have not gotten to the. I believe by the time we begin to see Q4 2022, the difference will be clear.
And the truth is that the bank is still not resting. The more they are taking, the more they want to take.
And they are raising notes and they are, aggressive acquiring. But the only thing that is my concern is the market is not looking at the way I'm looking at it.
Let us see, take time, you note that. You see how you make use of what we are doing now, I hope we'll be able to complete everything, is that any institution that you see will come first, second, third, as a matter of fact, fourth, in all these basic metrics we're going to be using, is the type that you can actually invest in. It is not price alone that should determine what you should invest in. An equity might be cheap and might not be profitable. For example, for those who have seen me in the physical, not on the tube, they will know that I'm taller than Aruna in the reverse. What is responsible for me being taller than you, Aruna, in the reverse? It's within me. And what is making Aruna to be shorter than me in the reverse is also in Aruna. These are the things we are bringing out. Let me tell you this. It's a family affair. I shouldn't tell you. There was a time my wife and myself were not so satisfied with the way our second child was growing. So we took the child to the hospital. The two of them were there. And then we complained to the doctor. Okay, but the child is eventually taller than the two of us now. Okay, but the doctor looked at me and then looked at my wife and now asked, are you not the father?
Parents.
I said, I'm the father by the grace of God. Is this not the mother? And I said, she is. And the doctor asked, how what
you
kind
don't
of
want
growth
that to grow.
are we expecting? There are some times, you see, investing, you expect unrealistic growth. You expect unrealistic performance. Okay? This is in turnover. Not in the growth, but in the performance. So today, not based on emotion, not based on branding, not based on relationship, but on figures that will not lie. Access is the biggest bank in Nigeria, going by the volume of trades. We continue. And of course, you could see that EcoBank is also coming very strongly.
Very strongly.
That is another institution you should watch out for. Then don't take your gaze away from Zenith and UBA. I stop it at that for now. Let's look at the turnover growth. Okay, want to know the relationship between the first quarter last year and the first quarter this year. And any company you see that will appear here, please hold on to it. It is telling you that the management is doing something.
This managerial efficiency.
It means that they are not just sitting tight, drinking tea. All right?
Yeah.
Let me read out the figures to you. Okay? In growth, that is the portion you see in yellow, Wema Bank grew the turnover. Of course, relatively small turnover, but from 19 billion to 30 billion, releasing 57.34% growth. Access, again, 48.92% growth. FCMB, 33.91%. Fidelity, 29.41% growth. Sterling, 23.19% growth. Fidelity was actually 29.41. Then Zenith, 18.31% growth. Then UBA.
Zenith 21.7.
Okay, Zenith 21.75. UBA 18.31% growth. Union Bank 18%. EcoBank 14.53% growth. Then GTCO 12.65. How come GTCO is it that they are still trying to get their bearing when it comes to their holdco arrangement? Or
I should believe that, because what this thing is just trying to tell us is the more share of the market, that you have increased your turnover from quarter 1 2021 to quarter 2 2022, which means that you will be able to expand, you will be able
Which
to
means GTCO is no longer expanding. So why is it the highest price in the industry?
It's no longer the highest price.
Okay, Zenith is the highest.
It's not trading as much as the Zenith is trading.
So what is
and they are not higher than Stanbic.
Stanbic, you see, I didn't even include Stanbic. Okay, because you will see results, you will see. But I think what is supporting the price of Stanbic
is
actually their share
structure, yes.
Their share buyback or something.
Their shareholding structure.
Okay. What is happening in GTCO?
I think they are trying to find their way back. At least, you see, one of the things I like.
Why did they find their way back?
You know,
why are they finding their way back? Why did they slide?
You know, sorry to quote the Bible, said that there are ways that seem right unto a man, but at the end thereof they are destruction. You might think that you have gotten it. You might say that this is the Eureka, this is it, but you are not the maker. You might discover that you walk on the road and it might not be as profitable as you think it is.
Wema is small in size, so to speak, but when compared with others, okay, and in growth.
You see what I say. What I told somebody is like they saw the future. They know where they were going to. That was why they came for that reconstruction. And you can look at it because there any partial is not based. You know, we used to say that share reconstruction is a scam, but we have seen share reconstruction that is not a scam.
That is real.
That they can make earnings to support the price. So if I think it's a new kid on the block. Is their performance wows everybody. We never expected this from women, but I believe that they saw it. That was why they went for
if
that.
If not that Adebise is not giving to media appearance, I will have invited him. I would have loved to invite him so that we could look critically into what is really happening in Wema Bank. Because again, Wema Bank is one equity that one company or one institution that I've had to follow more than others since year 2000. I've had to follow the performances of each of their managing directors, and when it even now got to Olekiti, we are even closer. But from Tunde Lemon and to Alhaji Adeleke. For those who had followed me consistently, you will recall when they were doing their public offer in 2004, I was wearing their T-shirt and their face cap on another television station, not on this platform there, promoting the public offer. But I must confess, this is one time that I can see. In all these years since Mr. Tunde Lemon left the management of Wema Bank, this is one time that I can see that life is back in this institution. I must confess, you can see the growth. This is not branding. This is not emotion. This is figure. All right?
Pure figures.
And again, we can see access coming second. That means the turnover was not a fluke.
Yeah.
It was real.
Yeah.
All right? Let's move further. Nigeria's biggest bank by profit after tax. Very important here. In profit after tax, Zenith was 58.19 billion. Access, 57.39 billion, approximately 54 billion. GTCO, 43.2 billion. UBA, 41.4 billion. EcoBank, 38.3 billion. Fidelity, 9 billion. This announced the small bank. All right. Union Bank, an ageless bank, more or less, 5.85 billion. FCMB, 5 billion. Sterling, 3 billion. Wema, 2.8 billion. The race is actually between Zenith and Access. Others queue behind them.
And why we even see asset falling behind Zenith marginally, because you can say it's 9.68 to 9.23.
Yeah.
It's because of the associated costs in this, the acquisition and the notes and the. But the moment that is over, like I said, we'll be seeing that even on this table are coming as number one.
In other words, you are expecting Access subsequently to lead the industry in turnover and in profit after tax.
The moment they are done with this, their notes, and like I said, is provided for in the income statement. The moment they are done with this, their obligation, I believe, and they can control. Most of these costs are not controllable. They cannot be diversified away because there are some costs. But the moment they are done with that, I think we'll begin to see assets are coming.
Let me tell you one of the advantages of what we are doing. Inasmuch as you could look at some small institutions within an industry and you invest in them, the best is for you to pitch your tent with the leaders in the industry. Gospel truth. Why is it so? When any risk hits the industry, by the time the leaders in the industry would be able to manage whatever the risk or challenges the smaller ones
would have gone.
And one of the reasons why Access is advisable and moral and also EcoBank is that they are spreading their tentacles beyond the shores of Nigeria. And this is what we are seeing here. Let me tell you, in the case of Wema Bank, why I can close my eyes and tell you that what we are seeing in Wema Bank is attractive and you could actually consider it, is this. Look at all the regional banks that started along the same time as Wema Bank. Where are they today? They are all
gone to sleep.
All dead. Long time ago. Long, dead, forgotten, and they have become history. But Wema Bank is alive. That is why back then, if I'm not mistaken, as far back as 2002, I described Wema Bank as an institution, like a cat
with 9 lives.
9 lives. If what has hit Wema Bank over the ages should hit some of these new generation institutions we are talking about, it will probably have been long dead. The same factor makes FVNH also profitable. It is a pity that we do not have the result here. Because you see, I keep saying this. If you see a young man of 40 years making mouth against a man of 80 years, I'm bigger than you, I'm richer than you, I'm better than you, I'm more exposed than you, and all the rest. You don't talk, and the 80-year-old man does not need to say anything. We should just wait for that 40-year-old man, when he gets to 80, if he is able to sustain and retain, then that is when he can talk. Because between 40 and 80, anything can happen. That is the story behind FVNH. That is the story behind Wema. But we have seen how that Access and Zenith are the biggest in the industry. Okay, that said, we go to the next. Profit after tax growth. That is the segment in blue. Again, Wema came to the fore, leading others by 118.95%. Sterling was next, 47.93%. FCMB, 44.61%. EcoBank, 25.68%. Zenith, 9.68%. Access, 9.23%. UBA, 8.76%. But you see, Fidelity actually had marginal decline in their profit after tax. GTCO also did. Union Bank also did. Wema is the emerging revelation of this first quarter.
Like here, it actually shows clearly what I was trying to talk about. Associated costs, how you can manage your costs. This is what is shown here. That you maybe you don't have any obligation, how you'll be able to, yet you are increasing your turnover, but you are trying to manage the associated costs. That is what is shown on this table.
And I think what we are seeing in Access as to why the growth in the profit after tax is that, you see, In my village it is said, if a child must grow tall, his legs
Must be long too.
So there are associated costs that must of necessity come with growth.
Yes.
And if you are able to sustain that growth pattern, and then you reduce those costs over time, which suggests that all that we are seeing now, particularly in access, it is not necessarily a stock for today.
No, it's a stock for the future.
I think it is a stock to be invested in today, but you don't expect your returns today.
Because it will get to a time that when they begin to pay the same dividend that the like of GT and Zenith are paying, the market have no choice than to reprice it to that level.
But is the market compensating Wema?
Of course, yeah. I think when this result was, Wema was not at 350 when this result was released.
PE ratio will tell us whether some of these equities are overpriced or not, but we are not yet there. We come to earning per share. In earning per share, of course, it will relate. Earning per share is the relationship between the outstanding number of shares of a company and the profit after tax. In other words, to be stated in a layman language, it states that if the current profit after tax should be shared
between all the
shareholders, how much that
each to 1 unit.
Someone that has 1 unit of stock in that company will go home with. Okay? Now, in the earning per share, Zenith led others at 1 naira 85 kobo, which suggests that at a price of 24 naira 50 kobo, first quarter earnings is 1 naira 85 kobo. How this price will make meaning to you is that you can annualize, right?
Yeah.
This earning per share. How do you annualize? Just multiply 1 naira 84 kobo by 4. And so when you analyze, what you get will tell you that most probably, if they are able to sustain this, what to stand to get. Let us now look at it. 1 naira 85 kobo times 4. If we analyze it, it might come to 7 naira 40 kobo. It does not necessarily mean that it will always be so. It might be higher, it might be lower. But this is already a projection. An equity investment must be based on a projection. You don't just buy based on the past. You should be able to project. That is your forecast. Alright? That is when you will now say the current price of 24 naira that I'm buying now is okay or not. True or false?
It's true.
Okay.
It's true.
So for Access Bank, it's 1 naira 61 kobo. Just analyze it. 1 naira 64 kobo times 4. It gives you 6 naira 56 kobo. So if a stock is selling today at 9 naira 70 kobo.
And they will do 6 naira.
So now, before we even get to PE ratio, I've started saying the equity that is cheap and the equity that is not cheap. And then you look at the table down, you will see EcoBank at 1 naira 56 kobo, GTCO at 1 naira 47 kobo, UBA 1 naira 21 kobo, Fidelity 33 kobo, FCMB 26 kobo, Wema Bank 22 kobo, Union 19 kobo, and Sterling 12 kobo. Okay, we are moving fast because we really don't have so much time. We come to the PE ratio and the earnings yield. This is where we stay a little bit. All right, PE ratio. Aruna, as at see, we need to analyze the PE ratio. Because this is as at first quarter. You get the point? Yeah. So to analyze the PE ratio as at the first quarter, you will need to divide by what?
By 4.
By 4. Oh, that is why I said what we are doing here is not common. This is not just informing you. We are not just doling out the same set of information that the NGS This is processed information. And we are also teaching you how to make use of the information. It is not coming on air. The Usher index of the NGS moved up 5%. What does it mean?
Which is available in any media.
Not just flashing something, growth of, what does it mean? Okay, please, all this would also be available on our website, stocksng.com. STOCKS, N as in Nigeria, G as in greatness, as in God. Okay, so now here, 3 equities or 4 actually become attractive. Number 1 is Access. Number 2 is UBA. Number 3 is EcoBank. Number 4 is Fidelity.
They all are like between 1 and 3, they are all over 10%, which automatically make my portfolio if you are going to. And mind you, this is able Q1. We have, like you said, this is a Q1. You need to even analyze this and see how it will go at the end of the day. But it just shows clearly that at 9 naira 70 kobo, Access is undervalued, underpriced.
And outstandingly the cheapest bank stocks.
That is what this table is revealing.
Because you could see in PE ratio 6.01
times
6.01 divided by 4, you get 1.50. If this is sustained, if Herbert and his team can sustain this level,
this tempo,
when it gets to the audited report, Access Bank should be a bargain if only you are bought at this price. But the failure of most people is that they will wait until
it is now 15 naira.
And you could see their earnings yield. Aruna, tell us more about earnings yield.
You know,
and why is it that you make use of earnings yield?
No, because we are looking at what portion of the earnings in relation to their prices. What is the percentage of the earning they are able to make in relation to their prices? The bigger, the better. If a stock is overpriced and the earnings is not commensurate, then the earnings will be low. And as far as I'm concerned, when it's lower than 10, except if it's one of these short stock with over 1 trillion, that I will consider. But if it is other stock, if your earnings is not 10% and above, I may not look at it.
So on this table, the 3 best equities that you can invest in include Access First, UBA and EcoBank.
Yeah.
All right. We are not looking at technical analysis. We are looking at figures. Okay. I think we have given you the best possible. Next week, by the grace of God, maybe we'll be looking at another industry. But before we round off, we still have about a minute or 2 looking at the best equities in price performance in the month of April. We could see Mayor paying 354.55%. That's not real. It is not as a result of any report or improved earnings. NACO, MB, that is Nigerian Breweries, Oando, Guinness, and all those, including Wema and Cadbury and Transcorp and Fidelity, all responded to positive earnings.
Yes.
What is your recommendation? What equities do you think I could consider for the month of May?
When Guinness is there, Guinness a whooping 730%. Cadbury is there. Only now as we speak, Cadbury is not ever available. UPDC is there from negative to positive. Transcorp is also there, even as at the price at the trade, I think it will still go far.
Okay, I still want to ask you one question. Okay, Oando, I can see it on the highest percentage.
Yes, anticipation of a good result, but they have released that that year is a COVID year, which we all saw in every other report. They might not actually be the ones that will talk about the COVID year. 2019.
Okay, we have given you the best possible, at least for now. So we've got to go. I want to say a very big thank you to you for staying tuned. And I will say more thank you to you if you go on those other channels, our YouTube, our website, Stocks NG, to look at this. If you stay connected with us on the radio, Monday to Friday, Metro 97.7 FM, Lagos. I want to say a very big thank you to the management of Lagos Television and their staff, including the one shouting now that I should go. All right. I want to say a very big thank you to you, Haruna, for being there always. And to my team, You are the best. We got to go. Until next week when I shall be returning again. Until then, I remain yours sincerely in wealth creation, its accumulation, and preservation. Abayomi Obabulijo. God bless you. Enjoy your holidays.